Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and leave us a comment below. Let's get into it.
Gold continued its record-setting rise this week, moving cleanly past the $2,900 per ounce mark on February 10th and continuing on up. At the time of this recording on February 13th, the yellow metal's highest price for the period was about $29.33. Trade war concerns remained front and center, with U.S. President Donald Trump introducing plans to impose 25% tariffs on all steel and aluminum imports. The levies will take effect on March 12th and are geared at bolstering U.S. production and jobs. Trump escalated tariff talk even further by announcing reciprocal tariffs on goods coming into the U.S. They could start being put in place within weeks and will reportedly be based on which tariffs individual countries have imposed on the U.S. Although one of Trump's campaign promises was to curb inflation, he said tariffs could initially send prices higher for American buyers. Time will tell, but new consumer and producer price index data shared this week confirms that inflation continues to be sticky. Bureau of Labor Statistics data shows CPI was up 3% year-on-year in January, above analyst expectations and higher than the 2.9% rise seen in December. On a monthly basis, CPI was up 0.5%, its biggest increase since August 2023. Core CPI, which excludes the volatile food and energy categories, was up 3.3% year-on-year and 0.4% from the previous month. January PPI numbers also came in hotter than expected, rising 0.4% from December and 3.5% compared to January 2024. PPI tracks inflation before it reaches consumers and can be a preview of where CPI is heading. During his semi-annual testimony to Congress, which took place over the course of 2 days, U.S. Federal Reserve Chair Jerome Powell commented on this week's CPI data, saying that the central bank isn't in a hurry to reduce interest rates further. Gold tends to fare better when rates are lower, but lately has been bucking the trend. Its historic price run began even before the Fed started cutting. Ukraine may strike a rare earth supply deal with the U.S. as the country looks to secure continued support from America in its war against Russia. Trump said last week that he expects equalization from Ukraine for the help it's received, explaining that he wants to see it in the form of $500 billion worth of rare earths. His comments have raised numerous questions, including whether Trump is referring specifically to rare earths or to critical minerals in general. Experts have also weighed in on whether Ukraine has the ability to supply such a large amount of material to the U.S. The Associated Press notes that existing geological studies are largely inadequate and states that 40% of Ukraine's metallic mineral resources are inaccessible due to Russian occupation. It remains to be seen how the situation will play out, but it's worth noting that Ukraine's president appears encouraged by discussions with Trump. We've got a great set of guests coming next week, and I'd love to hear what questions and topics you'd like to see covered. I'll be speaking with Kevin Wadsworth and Patrick Kareem of North Star Bad Charts, Craig Hemke of TFMetalsReport.com, and Yvonne Blashik of BMG Group. Leave a comment below to let me know your thoughts.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.